You're entering CNBC TV18's virus-free studio, powered by Century Laminates and Century Ply.
Welcome back. Well, as Anuj was pointing out just before the break, the markets seem to have put that first hour bottom in place. On the Nifty, it's about 11,340, 11,339 maybe to be precise. And on the Nifty Bank as well, 22,990 or thereabouts seems to have been the bottom. And we've recovered a goodish bit from those lows. So looks like the market is treating the Wall Street fall like it treated the Monday fall in India. Let's ask the expert though. Shekhar Sambhshivan, the investment director at Invesco Hong Kong, joins us from the sidelines of the Motilal Oswal Global Conference. Thank you very much, Shekhar, for joining us. Do you think that this markets, generally global markets and Indian market in particular, is still very much a buy on dips market, that you don't see too much of a danger to the recovery that has been afoot since end March?
Thank you, Lada. Thank you so much for having me on this show. One thing is reasonably clear that reasonably almost all investors are a bit surprised with this length of the rally, despite fundamentals not supporting them as much one can think of, at least at this point of. So where I see it right now is more and more we are trying to find logical answers to that. It's going to be that much more confusing. One thing which looks at this point of time reasonably clear to me, and perhaps can add a probable answer to this, is unlike the previous various disruptions which we have seen in the markets, GFC or before that also, the response of the central government this time has been quite pointed and coordinated, because the fear of this pandemic by and large hit the entire globe, by and large at a same point of time, maybe around February or January. And they were reasonably well equipped with their experiences, how they have handled it in the past. So how long, they continue to open the purse, and it is going to be, it's currently plethora or surfeit of liquidity, at least in the markets. We are going to find it slightly difficult to attach any logical explanation that how long this rally is going to last, buy on dips. And that's what I feel at this point of time. But sometime fundamentals will take over. We will come back to focus on earnings as well as how the value of various companies looks like.
Shekhar, good morning. So in that case, what does a portfolio investor do? I mean, stay with the winners, ride the momentum, or get a bit of a defense in play, raise some cash levels? What would be your advice?
We see it out here is ultimately it's a stock pickers market which has added value over a period of time. And that has been, engraved in stone for many, many years, and that has worked over cycles. So here also, there are two or three things which is going to be exceedingly clear, or at least certain to my understanding. One is that every disruption in the past has shown very clearly that consolidation happens, and this is no different. And consolidation leads to significant polarization of wealth creation, and this time it's going to be no different. So focus on the fundamentals where we see good companies consolidating market share in terms of they have the pricing power, they have the moats which is going to help in the time to come, and this pandemic disruption is going to offer no different. So it's not the question of defensive versus aggressive portfolio. It's all coming down to where you see traction of earnings growth very clearly coming.
Okay, Shekhar, hi, good morning. In fact, I was going through your Invesco India Equity Fund, and I noticed that you have a large presence in two spaces that have done very well. One is healthcare and the other one is insurance. So you have names like Sun Pharma, Janta Pharma, Apollo Hospitals, and even in the insurance space, something like an SBI Life. You think these two themes have played out and have become a bit overcrowded, or is there still more to go structurally?
So how we see here is more coming from revenue traction and visibility of revenue going forward, because it was slightly difficult when the pandemic started, that how much wealth destruction has happened across sectors and how much more to happen. So we have stayed away from those sectors or subsectors where significant amount of wealth destruction as well as questionability in terms of income generation is happening, maybe hospitality, travel, tourism related space, because we don't know how things will pan out there. But what seems to be reasonably clear on 2 or 3 segments, one is pharmaceuticals, one is digitization space, maybe rural-related, assisted economy. Here we see revenue traction is reasonably clear and will continue going forward. So to me, quality companies like we have picked up few, which are likely to do, and I firmly believe that we have more volume growth as well as margin tractions coming out here. Another play out here is pharmaceuticals per se had a very good run between 2005 to maybe 2015. And the last 5 years, they have found quite difficult space in terms of various issues related to regulatory problems or U.S. revenue easing off. We are seeing some consolidation happening out there, and going forward, perhaps if those 2 or 3 things is sorted out, we should be looking at reasonable good profile, both the top line as well as bottom line in that space.
Okay. To one specific stock, Shekhar, you were underweight in Reliance as of your July end portfolio. That is the last we have. Did you correct that? Because even from July, the stock has risen from 1900 to 2100.
Yeah, that's right. I usually do not talk stock-specific things.
Okay.
But you are right about, that stock has done reasonably well. They have attracted meaningful amount of money from various investors across the globe. We see more from a fundamental in terms of how earnings growth trajectory happens in the time to come. And accordingly, we act on that.
Okay, in the consumption space, there's a big revenge buying trade that's panning out, and you have names like Jubilant Foodworks, Bata, even something like a United Spirits, which I think people need the most in such times. Do you think that there's more to go for some of these names?
Consumption, as I mentioned, will likely play quite well. As I mentioned, more coming from rural pockets, giving revenue traction out there. And one thing which is, after I spoke to a lot of companies during the last few months, is coming out. The quality companies have done a commendable job in containment of cost metrics. During this difficult time, of course, everybody was suffering on the revenue count, but very clearly certain companies have shown very commendable discipline as well as measures to contain cost. And going forward, I'm sure that revenue will come back in terms of what we have seen pre-COVID levels and maybe more in the time to come. Surely, this discipline is going to help in terms of further growth in the margins. So we are reasonably confident. Again, it's a bottom-up approach of companies which we look at. So that's going to be segregating between winners as well as companies which may not do that well in the time to come.
Okay. Well, Shekhar, a final question to end where we started. You began by saying that macros remain disconnected, and this is an overhang which every investor, every fund manager will be working under. Now, if I were to give you 100 rupees for incremental investment, for say a 2 or 3 year return, how would you divide that 100 rupees?
You're talking about asset classes or within the...
No, I'm talking about stocks or sectors, if you please.
So the stocks is going to be nothing different, as I've been talking about.
Unlock stocks, that was my sorry, okay. Let me make it specific. Would you not include some more of, say, hotels or, aviation? You're not going to play any of those unlock stocks for the next 1 year?
See, honestly speaking, how we approach this whole investment is not to dig out for a smaller period of time.
Okay.
I need to see very clear revenue traction coming, improvement in margin going forward. If those looks like slightly difficult or visibility is blurred out there, I would rather avoid and go for the winners which are time tested and done wonders over cycles. So I would stick to the bets which we understand or which understand the company and sector.
Okay, Shekhar, thank you for being with us on the show, and we'll touch base with you once again in a bit. But for now, we need to get back to the technicals of the market. By the way, as we were saying, the market is held out.